Let's also focus on one stock that's, really seeing a big move today on the back of the news, both, of course, overall on corporates, but also on the GST rate cut for the hotel sector, Indian hotels. And joining us, Puneet Chhatwal, Managing Director and Chief Executive Officer, IHCL. Puneet, thanks so much for joining us. How have you read into the tax rate cut for the sector to 18%, given that hotels were taxed at a high rate of 28%. Do you think this move will lead to lower pricing at the customer level and also lead to significantly higher demand?
I think the corrections that have been made by the government are an absolutely welcome change for the tourism industry in general, but especially the hotel industry, which had been levied with a very high tax rate of 28% for GST for rates above 7,500 rupees. I think an equally important factor is the relief on the corporate tax rate, and the culmination of both of these is a step in the right direction to promote the tourism in the country, to promote the hospitality industry in the country, and that in turn will be a very strong multiplicator of jobs and will be an important step in the right direction in building business in general and tourism in particular.
Sure. Puneet, what about the reduction in rates for your company specifically? How much of a boost is the move to cut the e-visa fee for foreign tourists visiting India? And I'm sure you're also cheering the move of the tax cut by the FM, a bold reform by the government. So plenty of action across the board. How is all of this going to help to boost business?
For our company in general is very positive. I think it's positive for all companies. I think it's a very important relief, especially in times when growth had really slowed down, both on a global level as well as on the domestic front. And I think this will be a very good step, as I said before, that sometimes by cutting taxes, you actually create a catalyst for growth, and your collection in taxes actually might end up being much higher than levying higher taxes on businesses.
Right. Puneet, so, the domestic slowdown has prompted most core sectors facing, falling sales and profits to actually implement cost-cutting measures. How has the slowdown impacted occupancy levels for you, and what are the measures that you're putting in place for cost-cutting?
Well, as we have communicated on this channel before, we embarked on the journey of Aspiration 2022 and announced it to the capital markets in February of last year. And we said we will expand our margins by 800 basis points, going from 17% EBITDA to 25% EBITDA. And 50% of that was coming from cost optimization. So in a way, I think we have been doing a lot of these things for a period of almost 18 months, and these have been evidenced in our results. We had a very good Q1, one of the best, but it wasn't really coming just because of the increase in top line. It was also coming because of optimization of our cost and of our overheads. So I think we were on the right track. And the optimization in the tax structure will further boost our results on a profit after tax level.
Right. You'd also earmarked about 4,000 crore rupees investment over the next 3 years for acquiring properties in luxury, upscale and upper scale categories within India, as well as in partnership with Singapore's GIC. Walk us through the headway that you've made on this front, and what have been some of the properties that you've identified?
We have identified a few projects that are now undergoing due diligence. I cannot mention which one these are, but hopefully before the end of this calendar year, we would have at least had one or the other significant deal completed. We are not in a rush. It's a 3 years that we have given this 4,000 crore platform for. And I think it's more important to do the right deal at the right time and the right contract for the right location than to rush into things. And we do believe that there will be enough opportunities coming on the market to acquire assets that we can reposition and use this platform to acquire these assets so that we gain both as a minority owner in both the asset as well as through our management fees by managing the assets.
Okay, what are some of the strategic and tactical interventions to increase market share that you've undertaken, and what's the current market share at within the industry? I know we've talked about this, frequently, but just to once again, reiterate those numbers.
We have taken a lot of initiatives to increase our market share continuously by putting the right metrics in place, including specialized revenue management systems, including renovation of our portfolio. We have upgraded 17 of our hotels to the Taj brand, which resonates very well with the customer and the value proposition that the Taj brand has to offer. The same thing on our loyalty program with Taj Inner Circle and the improvements we have made therein, including to various brands that we have that have supported the Taj brand for several decades, like our club membership on the Chambers, which was also recently relaunched on a global basis. So I think a lot of these initiatives have helped us continuously gain our market share, and almost 35% to 40% of our portfolio is outperforming the market by a significant margin. Another 30% is in line with the market, and on the rest we are working so that it also becomes an outperformer to the rest of the market. And that is very important when the top line is not growing at the level that we all want and expect it to grow. The one thing that we control is our share of the market, and that the management is absolutely focused on increasing it on a daily basis as we get into the most important second half of the financial year for our industry till 31st of March.
Puneet, you also intend to bring down the net debt, which stands at around 1,975 crores to below 1,000. What's the timeline in place? What are some of the steps that you continue to work on to get there? And just to clarify, you're not looking at selling any assets for the time being.
Selling non-core assets is a part of our strategy that we have communicated to the market. We'll continue to do so with assets which are not strategic, which are not related to our core business. For example, the sale of some flats that we own. And I think that's very important, because when we bought them 40, 50 years ago, giving accommodation as a part of salary package was something that was expected, was a norm in any industry, not only the hotel industry. I think a time has come to make that change. So we'll continue to do that, but also redeployment of capital by exiting ownership in tertiary markets, like we did last year in Visakhapatnam or in Trivandrum through our subsidiary or our affiliate companies like Oriental Hotels. We sold 2 properties and redeploy that capital into strategic markets, into markets that are margin enhancing, into markets that provide us higher return, and in other markets we let the local ownership help us to provide us management contracts, and there we use our management capabilities to drive the performance in the company.
Right. We also understand that you're in talks with other Tata Group entities as well, which includes Tata Power, to convert their guest houses to homestays under the newly created brand, which is Ama Trails and Stays. Could you tell us a little bit more about what's the strategy in place here?
It's definitely not on the model of Airbnb. It's our brand, which we call as an important step in the homestay segment, and we are the first company to do so. We have already 9 of these properties in operation. 2 more in Goa are getting into operation at the 30th of September, which is in a week from now. And then we plan to add another 10 over the next 3 months with other group and affiliate companies. And the ambition, as we have articulated previously is to get to a total of 100 before the end of next financial year, and the majority of these would come from within the Tata Group companies with whom we are in discussions and negotiations, and I think we are making good progress on that front.
Right. So are you sticking to the capex plan of 5% of the total group revenue, which is around 8,000 crore rupees? And of course, what is the plan for room addition post the takeover of the Connaught Isbal in New Delhi?
We said we will be opening a hotel per month, and I think we are very much on track to open 12 hotels by 31st of March. We have a couple of openings lined up, although we have opened 4 already this year, but 2 more are awaiting an opening certificate. So that takes it to 6. Another 6 to 8 will follow before 31st of March. And I think we have added, and we have announced that to the market, already 14 new contracts which have been signed in the first 6 months of this year. Last year we had done 22 new contracts. So I think as far as managing our pipeline is concerned, I think we are doing what we said we will do. So we are adding enough hotels to the pipeline, and the more we add, the more are expected to open going forward. When it comes to capex, as we have embarked on the journey of focusing more and more on the fee-based business, the capex on new hotels has really been limited only to the Connaught in Delhi, which we thought was a very strategic asset, and it was the capital city. Other than that, it's the renovations of Mansingh, which will happen over the next 3 years. And the guidance we have given to the market is 4 to 5% of system-wide revenue, which is an industry norm for the normal capex per annum. And that amounts to anything north of 300 crores for us on an annual basis, plus the special projects. So we are very much within that framework, and we'll continue to invest in our portfolio to stay a company with the best-in-class brands and the best of the properties, to be in line with our aspiration of being the most iconic and the most profitable hotel company of South Asia.
Great to hear that, and good to have you on the show as well. Thanks so much for taking the time and speaking with us today. That's the word coming in from Indian Hotels, holding up 8%.